Okay, so he isn't admitting, but it does look like they've more than made up for the margins they lost. But we'll wait and see. Today, I don't know how much they will react positively because there has also been a slight rise in crude prices. So let's check. They could even counter one another. There is another CNBC data, an exclusive, which could move some stocks. The GST Council is set to meet again on January 10th in Delhi. And sources say that in this meeting, the Council could consider proposals pending from its last meeting. Now, what are those? Timsi Jaipuria, our reporter who, dogs the GST Council with some fervour, is here with us to tell us what could come about in that meeting.
Well, that's right. The next GST Council is all set to meet on January 10 in New Delhi, where the Council is likely to deliberate on the pending agenda items from the last Council meeting that met on December 22nd. What we understand from sources is the fact that the Council will consider the proposal to raise turnover threshold for GST from the current 20 lakhs to 75 lakhs, which is going to be a big boost for the MSME sector. Also, Council is likely to discuss the option of having a composition scheme for small service providers, which will be similar to the ones that exist for the traders right now. The annual revenue limit for the scheme could be between 50 lakh to 1 crore rupees. Also, Council is likely to discuss and decide on the proposal of bringing under construction residential properties in the 5% slab, which is currently taxed at 12% with a provision of claiming ITC credit. Also, the discussion would be on reducing the rate on cement, that is getting it from 28% down to 18%, which could be another boost for the construction sector. Also, we understand that the GOM headed by Sushil Modi, the Bihar's deputy CM and finance minister, on the proposal of having a revenue mobilization scheme in case of natural calamities and disasters, especially after the Kerala floods. This GOM report has been pending for long, and we understand that the Council will discuss on the final contours being brought down by the GOM on this. Let's see what happens finally on January 10. And yes, not to forget, will it be another rate changing meeting or not is something that we need to wait and watch. Back to you.
Okay, all right, MC. So lots of action expected at that GST Council meeting. Thanks. We will watch out for the details. Here is a quick recap of our top 10 stock list of the morning. Stocks with positive news flow include IGL, Federal Bank, Tata Power, sugar stocks like Balrampur Chini and Dhampur. Also oil marketing companies like HPCL, BPCL and IOC. Stocks with some negative news flow surrounding them today are Vodafone Idea and Bharti Airtel. So
hello, I protest. BOB should be there in the green list and Vijaya and Dana in the red list.
Yes. Let's add those stocks as well. BOB, because the merger details are in and it's going to become a large, relatively healthy bank. And the other two, because obviously it's coming at a discount to their stock prices.
I think BOB for sure, because the merger ratio is favorable and that takes away a bit of a overhang on the stock. Ashwani Gujral, Sudarshan Sukhani and Prakash Gaba now join us to take us through the market technicals. Good morning. Ashwani, what's the call on the index? You've been making this point that this is a market in which you want to buy all dips. Today, what would be the contours to work for in terms of Nifty and Bank Nifty?
Well, good morning. And, yesterday's level of about 10,745 and broadly 27,100 on the Bank Nifty. Both these are futures levels. They are the boundary line for the long trade. As long as these levels sustain, we will maintain our long positions. Now, the good thing is that there was a washout yesterday, and post that the Dow could not show great amounts of follow-through. So now the SGX is probably 100 points from those levels. As long as that sustains, I would think finally we will resolve on the upside. But overall, for the moment, all dips should be bought.
Fair enough. Sudarshan, good morning to you. What's your fundamental strategy on the indices?
Yeah, good morning. Well, yesterday was a volatile day all over the place and some key levels were broken, at least temporarily. But with all the levels broken in the Nifty Bank maintained its lows and did not hit our, say, Lakshman Rekha, the stop loss levels. So the Nifty Bank is clearly outperforming. Even for the Nifty, although it went below 10,800, I am a willing buyer today again. So I would buy the Nifty and reinstate my position. My positions in the Nifty Bank are already there. They have not been washed out. So the trade is still to be on the long side of the market. I would also feel that 11,000, 11,100 is within the realms of possibility. Now, when that comes and how that comes is a different issue. I wouldn't know that. But the trade is, if you are not long in the Nifty bank, go long. If you are not long, and you probably are not long in the Nifty, buy in the morning. There's no rush. You can buy 15 minutes later, half an hour later. The markets won't run away, but be long.
Okay, long is the call. Both Ashwini and Sudarshan in agreement in that. Prakash, good morning to you. What is your call on the index? Would you be a buyer this morning?
Good morning to you. I would say that Nifty is slightly sluggish. Bank Nifty is still better comparatively. So there is some kind of a problem between the two, divergence out there. It's difficult to say where it goes, but I would say that 10,683 is a very strong support zone to work with. Possibly on the lower side, perhaps takes 10,640 or 10,648. These are strong support zones. On the upside, I would say there's a resistance at 10,870. Depends where it opens. If it opens lower, those are buying opportunities. But if it opens higher, then I want to wait for a correction to buy. So far, that's the way it looks like. But certainly, Bank Nifty seems to be more stronger than Nifty.
Fair enough. The Bank Nifty does look a bit more stronger. In fact, it's been the case for some time now. Sudarshan, good morning. Let's discuss individual stocks then. What would be on your list?
Well, the list starts with ICICI Bank, which is a buying opportunity. The stock is making a perfect bullish head and shoulder. It's a classic textbook example. Now, I hope it works out, but I would follow it. So that's how the day starts. Consider buying ICICI Bank for the day, for a positional trade, and that's the reason why the Nifty Bank is probably doing much better than the others. Sun Pharma is a buy. I have explained earlier how it is building a base, slowly inching up, and that's exactly what's happening. Sun Pharma again is a positional trade, a day trade, both. The other long side trade is Marico, which comes in my list after a long time. Marico is now coming out of a small correction, and FMCG should do well. So 3 buying ideas, 2 intraday short sales. JSW Steel, which you know that star of erstwhile years, is now falling and breaking support levels consistently. That's a short for the day, only intraday. And Bharat Forge, same reason, breaking support levels. But focus on the long side. Don't get worried about the volatility that's existing.
Okay, all right. That is Sudarshan's list. Ashwini, what are you trading today?
Yeah, I am also on the long side because I think once this global market starts to turn, we are still going to outperform on the upside. So this is a time to build up positions for that next upside. I think ICICI Bank is a buy with a stop of 360, target of 374. HDFC Bank is a buy with a stop of 2100, target of 2175. HUL is a buy with a stop of 1770, target of 1810. NCC is a buy with a stop of 87, target of 95. And NBCC is a buy with a stop of 56, target of 64.
Okay, that's all buy list for Ashwini. Prakash, good morning. You have 2 buys and 2 sells.
Yes, Anuj, good morning to you. I'll start with BEL. Looks good. Good base formation. The move started yesterday. Target on the upside in the vicinity of 92. Stop below 87. I have BEML as well. Seen a good up move right from 700 zones into a consolidation. And a fresh up move started again yesterday. Target on the upside 950. Stop below 910. And I have a sell on Bharat Forge as well. Looks weak. Looks like the correction is over on the upside. Down move is starting again. Target on the downside 480. Stop above 510. And good old Tata Motors, always a short. Looks like it's heading down to levels closer to 162 zones. Stop above 171.
Okay, all right, gentlemen. Thanks for those trading calls for the morning. We will come back to you in a bit to discuss more stocks. But right now, let's turn the spotlight on the macros once again. After a whole host of seesaw events in 2018 across the world and in India, it is a new year now, a fresh beginning. So what does 2019 hold for the world economy as well as for India? Lata has a special guest joining in. Lata, over to you.
Yes, so welcome to our special series, Outlook 2019, where we have been over the past week getting a series of top-notch economists to tell us how the global and the Indian economy may shape up during the current year. My guest today is Chetan Ahya. Chief Economist and Global Head of Economics at Morgan Stanley. It's a matter of pride for us that Chetan has gone on in Morgan Stanley from being the Chief India Economist to the Chief Economist Asia Pacific and is now that company's Chief Global Economist. Chetan, thank you very much for joining us and wish you a very, very happy 2019 first up.
Happy New Year.
All right. Thanks for that. Well, let me come to business because the markets are in a tense mood throughout December. All stock markets have tumbled, worrying that the global economy is slowing. That growth scare continued today, you know, after Apple guided to lower earnings, again because of global growth slowdown fears. What's your assessment of the global economy in 2019?
We expect some moderation, but we think the growth will be somewhere around the trend line number, which is around 3.5% for most of the quarters in 2019. But I think the bigger story that we have for 2019 outlook is we think that the mix in growth will change, i.e. DMs will slow, but EMs will actually stabilize. And so therefore, the EMs will take the lead in terms of driving global growth in 2019.
Okay, well, that's positive. But first, let me take the DM part a little more on the United States itself. You know, Wall Street indices were among the worst performers in December, and that's the mother market. What are you expecting in the US? And hence, what are you expecting by way of US Fed policy?
So we are expecting the US growth to slow meaningfully to 2.3% average in 2019. From the current run rate for the fourth quarter, it looks like it's tracking at around 3.6. So we are seeing a meaningful slowdown in the US in 2019. And therefore, we do expect the Fed to pause around the middle of this year. Either it will stop taking up any more rate hikes. But I think, Lata, the bigger issue which the markets are now grappling is with the decision on the balance sheet. So at this point of time, we think the Fed continues to run off the balance sheet until the third quarter of 2019. But the market is concerned that that cannot be taken up by the Fed so aggressively. And so we need to wait and watch. On January 4th, we will have discussion from Powell, and then on this Saturday, we will hear from Williams on the path of the balance sheet in terms of framework. So we are watching those two speeches to see if there's any indication coming from the Fed where the Fed would like to bring in the discussion on the balance sheet into play as well. As of now, the Fed has said that, look, if there's a problem on growth outlook, we will alter the rate hike path, but they have not talked about balance sheet. And so I think that's what market is really looking for. If they give a comfort on balance sheet path being also in play as far as overall growth outlook management is concerned, that's what I think will be useful to watch for the markets.
Oh, okay, yeah, you know, we were just discussing that with some other economists. They're not very confident the Fed is as yet that worried about growth to give any indication about balance sheet. But let's wait and see. 4th and Saturday, which would be what, 6th, are important dates. What about the dollar itself then? If there is going to be such cues, then has the dollar peaked for now?
Yeah, we think the dollar has peaked. And look, I think the other side of this is that the EMs are in a better shape now, broadly in terms of its level of real interest rates as well as the path on fiscal policy. So EM's inflation continues to be relatively low. It's at a 15-year low. And so that's also creating a backdrop where EMs are in a better shape. And so we think both in combination, where US is expected to slow, the Fed is expected to pause, and the fact that EMs are doing okay, the dollar will continue to weaken against broader EM space.
Okay. All right. I'll revisit that with respect to the rupee. But first, let me finish the global questions. Coming to China and the EMs, you know, the Chinese Caixin PMI number, which just came, showed a contraction in December. Tim Cook is worrying about Chinese growth. What's your view of China?
So we think China will continue to show some weak numbers for the next 2 months. There has been a compounding of problems for China. One is that they had been taking up deleveraging, and so therefore they were not taking up aggressive easing. and the trailing tightening on regulatory front on the financial sector has actually weighed on domestic demand. At the same time, we have seen trade tensions weighing on their exports growth. And so the combination of this domestic and external pressures has kept the numbers somewhat weak. And we think this will be the case in the next 2 months. But after that, with the cumulative easing that they have announced over the last few months, more particularly in the last 2 weeks, we've heard them confirming that there will be a VAT tax cut taken up of 2 to 3 percentage points. At the same time, they have increased the quotas for the local government bond issuance, which we think will stimulate the infrastructure spending. So from March, April onwards, we should see improvement in China's growth data. So we do think that China's easing will be effective and drive growth from March, April to this year.
Okay. Now, you know, if US is slowing, and according to you, China is going to slow at least initially for a few months, how come you're positive on EMs? Can EMs grow if the largest and the second largest economies are slowing?
We are expecting China's growth to slow a little bit on an average for the full year, but on a quarterly basis, it will stabilize from second quarter. And when we look at the EM aggregates, EMX China is actually showing some improvement in the last 2-3 months, particularly Brazil, India, and some of the other smaller EMs like Turkey and Argentina, which were earlier going through a lot of problem, are beginning to see some respite. And so EMX China as a group, which is roughly about 27% or 25% of global GDP on a PPP basis, will actually be the one which will do somewhat better going forward. And that's what keeps the overall EM aggregate stable for us.
That is the most interesting question I would ask you. But first, let me just finish one more global question. Since you're expecting a global economy slowdown, we have seen those fears resulting in steep falls in crude and even in metal prices. How do you think these commodities will perform in 2019?
Well, I think a large part of this is to do with China in terms of broader commodities. Oil is a different component which has got impact of supply side issues too, but a lot of the commodities from demand side is dependent on what happens to China. And so to the extent to which we expect China's infrastructure spending to pick up from March, April, at the same time, there is an overall broad-based policy easing that is being taken up. You should see pickup in demand for some of the broader commodities with China's improvement in growth from March, April this year.
You know, Chetan, I'm still intrigued by your view of China. Several economists that I interviewed in this series have worried that the tariff war between US and China is not a tariff war, it's a full-blown Cold War and will spread from tariffs to intellectual property rights and maybe even to military standoffs like, you know, say the South China Sea. You don't see this impacting Chinese growth through the year on one pretext or the other?
Well, I think we would separate the two, the broader issues on geopolitics versus just the narrow tariff issues. So on the tariff front, I think to the extent to which we are seeing a lot of progress from China, just over the holiday period, China has announced that it is going to set up a court to address the intellectual property rights cases separately. And at the same time, they have made law changes which will make it possible for foreign investment to take place without having to make forced technology transfers. So I think China is continuing to take up on all the sort of issues that the US has raised in the context of tariff. And so to that extent, looks like probably the tariff issue may be getting addressed. And I think right now in terms of growth outlook for China, that is a more important one immediately to impact its overall business confidence. But the broader trade tensions are likely to persist, Lata, but I think it's got less of a ramification in terms of the near-term growth outlook.
Well, at least Tim Cook didn't sound so hopeful. Just a few hours ago, he was speaking on CNBC US. Didn't seem hopeful about China. In any case, what is your GDP forecast for China?
So we are expecting growth to slow to around 6.3 in calendar year 19, and then further on to 6.1% in 2020. But look, Lata, I think it's also in the context of the fact that, investors are far more concerned from what seems to be the chatter around about China's growth outlook, that it will just not be able to stabilize and growth will continue to decelerate. And that is something that we differ with, because, this is always the case when China's data is very bad. Policymakers eventually do care for the growth outcome and they do take up easing, and we are actually seeing them in announcing many more measures in the last few days. So that's where our conviction is, that its easing will work. I think there is a question mark on whether its easing will be effective or not. Yeah, you are right. We are on the more constructive side of that coming in through.
No, good. I mean, I'm good to hear something constructive. But let me come to the more constructive part that you said. You said a couple of times that you're optimistic on some EMs, including India. Now, what's the Morgan Stanley view of the India growth story?
So I think India is in a different cycle in some ways compared to China. So structural story is intact, and it had a deep cyclical problem because of the adjustments that had to be made during the period post-taper tantrum. And after that, we had demonetization, GST, and just very recently we had the NBFC problem. But the underlying fundamentals in terms of the policy mix, i.e. what is the real rate levels and what is the direction of broader fiscal policy, has been quite supportive. And then the outcome of this policy mix, which we watch in macro stability indicators, inflation and current account deficit, that had also been in a pretty good shape. So India is all set to see that gradual improvement in growth, and I think the numbers are still pointing in that direction, except for the auto data that we expect to have had some impact because of NBFC problem and the real estate sector. The broader economy seems to be doing well. The PMI data today also shows that expansion phase continues. So we think India is on a gradual recovery path that continues to build. So we're expecting average GDP growth to be 7.6 in 2019.
Okay, well, just one question for old time's sake. I think he was your friend, the former RBI governor, resigned, and quite clearly not for personal reasons, but probably on central bank independence issues. When you speak to FIIs out there, is that troubling them at all?
Well, as of now, it seems to have been not as much of a concern to investors when we speak broadly. I think the most important issue that the foreign investors will be focused on is the monetary policy framework management. If there is any alteration to that, I think that could raise concerns. I think the issue of, regulatory front on the banking system, that is less of a focus for the investors, but what they really care is monetary policy framework. So I think people will be watching that one more closely.
Okay. Well, obviously the most important event for India, monetary policy framework, yes, is there, but the most important event in 2019 is going to be the general election. If by chance there is a coalition, either led by the NDA or led by some non-NDA parties, will that hurt the economic growth trajectory?
I think it will be. So that is a risk. In fact, that is a risk not only for India, but just broadly the EM space. The political risks are there. It's there in India, it's there in Indonesia, in Brazil and Mexico. We are watching for actual policy implementation after the new governments have been formed. Yeah, so as long as you have a stable coalition government with one of the two parties having upwards of 200 seats, that would be the outcome which will be more favorable for the growth cycle to continue. But if you do get a adverse political outcome, that is a significant risk for India's outlook.
Okay. Well, then now once again a global question. Where will smart money go in 2019? Does it go to developed markets at all? Will a bulk of it go to EM markets? And which asset classes? What exactly is Morgan Stanley advising?
So I think the big call that we made in the year ahead outlook piece from our strategy team was to invest more in emerging markets rather than DMs. And there was a broad-based constructive view on EM currencies as well as EM local currency government bonds and EM equities. So That is the big call that we have made for 2019.
Okay, that's good to hear. Well, let me just get one more India question in. Yesterday, the Indian rupee fell rather sharply. What's your take on the Indian currency? Gentle appreciation, gentle depreciation for 2019?
We have a view that broader trend for the dollar will be that it will weaken. In that context, we expect the rupee to be on a slight appreciation path.
No, actually, you're there so close to Wall Street. Maybe you understand this better. What's your take on this severe volatility that we have seen in US markets and the scary December fall? Will this volatility and this decline end anytime soon? What is it telling you about the underlying economics?
I think the simple explanation of that is that there has been concerns on global growth, not as much the US growth itself. And that has made the Fed a little bit more careful in changing its tone and not talk about a shift in the policy stance. In the backdrop, the global growth data point had continued to weaken. And so to the extent to which the talk from the Fed was hawkish right until first week of October, while global growth data was showing some concern, that's what has created this tension between markets and the policymakers. Now, we have seen one leg move from the Fed that they have said already that they will pause at neutral. That's an indirect indication that they have given. But as I was mentioning to you earlier, they have still not brought balance sheet into discussion, i.e. that balance sheet is still expected to be on autopilot. And that's where the tug of war between markets and policymakers is likely to continue until we hear from them. And that's why I was mentioning earlier that we would be watching the next few speeches from the Fed speakers coming up in the next 2 weeks more closely.
Okay. We will depend on you to watch that and parse it for us, Chetan. Let me just squeeze one more question. We're running out of time. You have been positive on EMs. What is the pecking order, the ranking?
So our strategy team's view is that China, India, and Brazil are the top 3 picks from an equity market space in the emerging market equities.
All right. Chetan, thank you very much for staying up for us in the United States and speaking to us about 2019. We'll hope to see you when you are in India. Thank you very much for joining us. Have a great 2019.
Okay, all right. And Lata is going to join us back in this studio in just a minute after that great conversation. By the way, needed to keep an eye out on Asian markets because there is a bit of a sell down that's now beginning to show up, for instance, in a market like Hong Kong, even Singapore for that matter. And so these markets are now at the day's low end.
And Hang Seng as well, SGX Nifty, falling at the low point. I think, there is genuine case now, Surabhi, for NSE to have index trading. From say 7 a.m. or what, because it's people can trade SGX Nifty, right? And so obviously that should be there for everyone, but it's now at the low point 10,843, and again telling you that perhaps the market is in a bit of a sell-on rally phase for now. Manoj Muralidharan is also with us from Religare. Manoj, good morning. Any trades on Bank Nifty? If not, on individual stocks?
Good morning, Anuj. Anuj, the equation is very simple. When we start a new contract, the open interest itself says the view that the traders have on the market. Now, if you see the month, this contract of Jan, the Bank Nifty opened with almost 50% lesser open interest. If I'm not mistaken, it was somewhere close to a 12.7 lakhs just versus a 19 odd lakhs that we started the December series. And intraday also, if you see, there is good build-up it happened, but unfortunately, there is no follow-up trade which happens. And yesterday was the first time where the Nifty futures could manage to add in 4 to 5% of fresh short positions. So we believe that these short positions have been carried for the first time, at least into this calendar year. So we would see some more distribution in the Nifty. So the trade for the Nifty goes at this point is you sell Nifty somewhere close to a 10,880 to 900. We are expecting it to come down to almost 10,700 to 10,750. And because today is the weekly expiry for the Bank Nifty and some long unwinding is being seen, so the better strategy here is you sell at 27,500 call option. or a 27,400 call option. Try to sell it when you get a premium of at least 35 to 40 odd rupees, because we are not really expecting it to inch beyond that, and because the max pain or the maximum outcome we are expecting this expiry might be closer to a 27,050 to 27,100. So the call option might get called off. So let's say a target of 5 on that.
Okay, that's on the Nifty. What about other trades? I think you've got ITC on your mind. What kind of a trade are you doing here, Manoj?
Yeah, absolutely. It's a long trade. I guess ITC has seen good rollover, and there is good cash-based buying which has happened. So we believe that there is a possibility of 320, which might come possible in the next 30 to 40 odd trading session. But for the short term, I would advise buying that, let's say around 280. Keep a stop loss of 274 odd on that, and we are expecting the first move or the distribution of 293 on that. And now, because we are seeing some good buying which is happening in the IT stocks as well, so we would still recommend you can go ahead and buy a TCS as well. Let's say at 1920 you can buy that with a stop loss of 1900. A target somewhere close to 1980 is very much possible in that stock as well.
All right, Manoj, thanks a lot for all those trading ideas. We'll take a break and